Good morning. Welcome to Stock Market Today. It's Thursday, June 18th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today, where you can sign up for a free email where I get a lot of the content for this show, as well as give you daily stock ideas to consider that hits your inbox every trading day before the market opens. So U.S. equities mostly lower in Wednesday's trading after a solid start to the day gave way to afternoon weakness, which caused the S&P 500 to break a three-day winning streak. Treasuries were mixed within a tight range. The dollar was stronger on the euro and sterling crosses, but weaker against the yen. Gold finished down 10 basis points. WTI crude settled down 1.1%. A lot of the same drivers in play here. Some of the housing data that came out was weaker than expected. Still some focus on increasing COVID cases in some states, kind of butting up against the fact that fiscal and monetary stimulus are still in play. I think it's easy to argue the bull case or the bear case from current levels, which is why we're just going to let price dictate, which is what we've been doing all along, really. We've highlighted key levels. We'll continue to do that. As we get to the desk this morning, futures are a little changed to slightly weaker. Asian equities were mostly lower overnight. European equities are a mixed bag here this morning. Treasuries are flat, but actually slightly stronger further out on the curve. The dollar is mixed against the major crosses. Gold is up 20 basis points, and WTI crude is up 0.5% as we start the day with the S&P 500 looking like this. Stalling at the gap, I guess, is one of the best ways to talk about it here, right? Gap down last week, Thursday, rally back 3 days in a row, fading in this gap here, right? So 3,200 starts to become a little bit important. That gap maybe starting to solidify itself, still needs some time to play out. We clearly know that 3,000 to 3,100 just below us is very important. Below that, 2,850 to 2,950, right? 2,850, in my opinion, keeps the structure of the uptrend intact and leaves the door open for an attack on the highs. Break 2,850, we need to reevaluate that thought process, right? So to me, the February highs are in play if support holds, right? Get used to this kind of thought, this in and out, right? This kind of changing probabilities as the facts change. Dan, are you bullish on the market? Yes, I'm bullish on the market as long as the S&P 500 is above 2,850. That's a perfectly logical statement, and that's kind of how I come at the world. Try not to get yourself pinned to I'm bullish, I'm bearish, right? I'm bullish if. And if happens, you change your view. We are near oversold conditions here based on the 13-period CCI. Chaikin money flow is bullish. So not much of a change really over the past couple of days. Support holding, that's important. Some work to do here in this gap. As long as 2,850 holds, the structure of the uptrend remains in place as far as I am concerned, right? So let's look at our market in a minute now. What are we writing about in the note today? Well, we fade in the afternoon, and that snapped a 3-day winning streak. New COVID cases continue to spike in some states, and it's getting a fair amount of attention in the media. There's some back and forth between Fauci and Mike Pence, which is kind of interesting. We'll have to see how it plays out. I do not, in my personal opinion, so take that for what it's worth, is I don't see there being an appetite for another shutdown. Okay? I just don't see it. Obviously, anything can happen, but it's hard for me to imagine that states will begin to shut down again unless this really gets out of hand in a quote-unquote second wave. But I think it's something that needs to be on your radar screen if you're watching what's going on here. Breadth metrics weakened, but no damage done yet. In small caps, growth is the place to be. Futures point to a mixed open here today. Taking a look at the power bars now, 3 to 6 for the Dow. Bulls to bears after losing 75 basis points yesterday. S&P 500 down 40 bips, 92 to 103 bulls to bears there. NASDAQ outperformer, only one of the majors up on the day yesterday, 33-10 bulls to bear. Small caps, big underperformance. You have this interesting dynamic at play, where on down days, small caps lag badly, and on up days, they outperform greatly. So that's kind of interesting. Let's see how that continues to play out. Flight to safety a little bit, sends bonds higher, yields lower. According to the Chaikin Power Bar, large cap stocks are more bullish. Small cap stocks are more bullish than large cap stocks. Major markets are mixed. Stock of the day today, as we've been doing of late on Thursdays, is a screen of the day, right? So what are the key data points that I'm highlighting in my note? Or not really key data points, but a theme, right, that we've been on for a while is this rotation, right? Growth to value, if it's playing out, I'm not convinced yet. Large to small, if it's playing out, I'm not convinced yet. But what's interesting to me is, as always, the better story is under the surface. And within the small cap realm, it's actually the growth areas that are outperforming, right? So I spent a lot of time talking about that or writing about it rather, in my note today. And our screen reflects that. So I am using the small cap growth starting universe, and I'm screening for stocks that have a Chaikin Power Gauge rating of neutral or higher, right? And I'm willing to look at neutral stocks because I'm also screening for stocks that have strong relative strength and a 3-month high persistency in the Chaikin money flow indicator. But finally, I'm interested in things that are kind of somewhat actionable now. So if you notice the charts that we continuously look at on this show, we like things when they're oversold, right? So what I'm looking for is very neutral plus neutral stocks are better within small cap growth, outperforming the market with strong money flow that are currently oversold, right? So if you'd like to screenshot this to me is a great starting point if you're looking for names to add to the portfolio that are somewhat actionable now. Take a look at this screen. You might recognize this name from the other day. So this to me is somewhat interesting. Taking a look at the sector tracker now, moving to the major sectors over the last 5 days. All red again with your rotation trade at the bottom of the list, right? Materials, financials, energy. Interesting to see the Utes there, just given what's playing out at the top of the list with staples. We have comms, tech, and real estate also at the top of the list. Discretionary, healthcare, and industrials are middle of the road. All groups lower over the past 5 days. Our industry in focus, pharma services. And this is an interesting one for me because it's shifting. Over the past 6 months, it's actually been an underperformer, which is kind of interesting within the context of what we've seen in volatility over the past 6 months. You would think that pharma stocks would be viewed as somewhat defensive, but they do have a strong power bar ratio, 11-7, right? Names like PBH, Supernus, and Horizon. I actually like Horizon. I think that's an interesting name here. All with very bullish Chaikin Power Gauge ratings. But take a look at what's happening here. There's no two ways about it. Now, you've heard me talk about healthcare, fading relative strength in healthcare, right? We've been talking about it for 3 weeks now when we do our sector work. Check out what's happening to pharma, right? Bullish rating, yes. Wrestling with the trend line, yes. Bearish money flow? Investors possibly using this recent strength to lighten up on the group? Would seem that way. Look at the relative strength here. Fading. Look at some big pharma names too. You're starting to see a very similar dynamic at play. So potential shift there, right? In line with what we've been talking about for healthcare over the past 3 weeks. So kind of interesting to me to watch that dynamic play out. For me, yeah, I think the combination is important, right? Yes, it has a bullish rating. Yes. But what do we talk about constantly? Bullish rating and relative strength. Bullish rating and relative strength. Bullish rating and relative strength at 34 on its way to 44. Bullish rating and relative weakness in the $40 to $44 range doesn't interest me as much, especially when it looks like the fund is under distribution. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. Not a lot on the company-specific news front these days. So, I mean, AAP up 4%, nothing company specific there. Activision up 3.5%. I've been bullish on the gaming stocks. I've written about them quite a bit. Activision, Take-Two, EA. It continues to be an interesting idea to me. AON, very bearish stock, up 3% yesterday. News A, seen a bit of a reversal, up 3% yesterday. Willis Towers Watson up nearly 3% yesterday. Again, nothing company specific that I can point to. Loser side of the board actually is a little bit more data. HRB, it's H&R Block, bearish name, down 9.5% following their earnings announcement. Norwegian Cruise Line extending some of their cruise suspensions, down 8.5%. Royal goes along for the ride on that news. FANG, nothing company specific there. Carnival goes along for the ride yesterday on the back of the Norwegian news, and then reports earnings today. So we'll have to see how that stock trades. So all of the stocks on the loser side of the board, bearish power gauge rating. So Thursday we do breadth, right? Percentage of stocks in the S&P 500 above their 200-day moving averages has come in, right? Remember we highlighted last week the market was overbought. We thought we'd see a pullback. We saw that pullback Thursday and into Friday morning, and that hit our breadth metrics. No two ways about it, right? We had our healthy majority last week. We like a healthy majority, 60%, right? That's a solid trend, right? 50% is obviously a majority, right? Simple math. We're back below that line right now. And I know for those of you who follow David Keller's work, he was talking about this yesterday as well. So long-term trends, still not where we want them to be, still not where we want to see them. The intermediate term is a better picture, right? The percentage of stocks above their 50-day moving average was up here near 20-year highs, obviously came in a little bit, but still 87% of the stocks in the S&P 500 are above their 50-day moving average. At the same time, the advanced decline line continues to chop higher with the market, right? And this one, honestly, it doesn't really give a lot of useful information unless it's diverging, and I haven't seen it diverging in a little while now. So, but if we look at the percentage of stocks in the S&P 500 above their 20-day moving average, which I do in my note, that's also, it was hit, right? But, still kind of the majority, right? This one pulled in pretty hard, but still 55% of stocks in the S&P 500 above their 20-day moving average. So some damage, but nothing pressing just yet. That has me concerned from a breadth front on the S&P 500, hence breadth down, but not out. Now, I told you the crux of what we were writing about today was small caps and what looks interesting within that realm. Because a lot of people are talking about this small cap resurgence, and there's no two ways about it, right? Small cap stocks have rallied back hard, right? They were down hard. They've been massive underperformers. Some might even make the case that small caps were in a bear market for 2 years, starting in 2018. I can make that case. And we want to see small caps rally, right? We want to see small caps doing well, right? Because that's added breadth to the market. My point is, I don't see small caps outperforming large. IWM relative to SPY, clear downtrend. And what looks to me, this snapback on a relative basis looks like just a correction of this kind of massively oversold reading, right? So a mean reversion back to a declining 200-day moving average as the RSI can't even get overbought, right? So that's kind of interesting to me. So, but under the hood, I like the small cap growth space, right? IWO, iShares Russell 2 growth, right? Looks very similar to the S&P 500, same structure, highs are in play. IWO relative to the SPY, nice steady uptrend off the lows. And here's IWO relative to IWM, massive outperformance. So I think that if you're going to look at small caps, you want to make sure you're in the growth area of small caps. It's going to wrap us for today. ShakenAnalytics.com/test drive to take us for a spin. I'll be back with you tomorrow.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.